The Heikin Ashi indicator is a very popular and widely used indicator among beginner traders. This is because of its readability and wide availability. However, due to its inconsistencies, it is not a very profitable trading indicator, especially if you use it as your confirmation indicator. In this video, I'll be giving you a better version of the Heikin Ashi indicator, which will outperform it 100 times and over in any backtest. I'll be showing you why the new indicator I'll be introducing to you will always outperform the Heikin Ashi indicator in your backtest. But before that, let's, first of all, understand how Heikin Ashi works. Now, if you're on TradingView, it is very simple to add the Heikin Ashi indicator, unlike on the MT4 and MT5 platforms, where adding it along is a hassle and very hard to do. Now on TradingView, to add the Heikin Ashi candles, you're to click on this candle bar here. Next, you're to scroll till you find Heikin Ashi. Click on it. Now that it has been added, you'll see that if you're taking its signals meticulously, it could give 1,000,000 signals in an active market. In this given example, the market was in a downtrend, as you can see from the moving average line, and we can count how many sell signals were given in this market. I can see 1, 2, 3, 4, 5, and 6 signals given to sell the markets, and also countless buy signals. Now, this is an inconsistency if you're looking at the Heikin Ashi indicators to get entries. This particular chart is on the higher time frames, so on the lower time frames, the Heikin Ashi indicator will give even more false signals. That is why almost no professional trader uses the Heikin Ashi indicator, but if you do consider using the Heikin Ashi indicator, make sure to use it together with many other confirmation indicators to reduce losses and keep more profits. That being said, it is not impossible to create a profitable system from the default Heikin Ashi indicator. But if you're given the chance to drive a Toyota Yaris and a Lamborghini Urus, which would you choose? The Urus, right? Now that is the same as using the Heikin Ashi in this new tool that I am about to show you. This indicator was also derived from the Heikin Ashi indicator, and the name of this indicator is the Heikin Ashi Smooth Indicator. To add this indicator to your TradingView, you're to go ahead and click on the Indicators tab on TradingView. Next, search Heikin Ashi Smooth. You're to select this one by Q-Angle. I still left the Heikin Ashi candles so we can observe the difference between both indicators. You can see that over the same price action. The Heikin Ashi Smooth has managed to maintain the same sell signals over this space where the Heikin Ashi gave at least 6 signals, which most would have resulted in a loss. Now, what is the Heikin Ashi Smooth indicator made from? This indicator is made from moving averages. If we click on the Setting tab on this indicator, you'll see that 2 moving averages are currently attached to this indicator. You can also change the period for a better or more smoothing factor from the indicator. In this video, I'll be leaving it as the default, which is 10. Now, how would we use this indicator to generate profits? I always preach on this channel that you should never use only one indicator in your trading. It doesn't make any sense, as no one indicator is the holy grail and you'll lose a lot of money if you trade only using one indicator. You need to create a system with a confirmation indicator, a secondary confirmation indicator, a volume indicator, a baseline indicator, which are mostly moving averages. Throughout my channel, I've been giving out a lot of indicators, so you can test until you find the AHA moment. That being said, in this video, I'll be giving you the most basic and simple way that you can apply to see some results when using the Heikin Ashi Smooth indicator. First of all, the moving average indicator which you can see in this video is the Arnold-Legu moving average, also popularly known as the ALMA indicator. I have it on 150 periods. So that will be used to know the current trend of the market. If the price is above the moving average, we will only be taking buys, and if the price is below the moving average, we will only be taking sells on the market, because only trend-based trading can ever make you profits regardless of the market that you trade. Now let's look at our example. The white on this indicator lets us know that the current trend is a bear or selling market. You can always change the color to red for easier readability, but I'll be leaving it like this in this video, while the buy is given by the green candles. For the first trade here, we have a white bar here, which is a signal for entering a sell trade. Now, since the price is below the moving average, we can take this trade. Now the stop loss has to be at the high of the candles. We aim for a 1 to 2, which was reached. Next, we have a green signal, which is a buy trade. Simultaneously, the price of the asset also closed above the moving average, so the trade is valid. We're going to take the trade and aim for a 1 to 2 risk to reward trade. The stop loss will be at the low of the candles. In this case, the 1 to 2 risk to reward was also hit on this trade. The next signal is a white signal, which signals a sell trade. and the price is above the moving average. This means that there is a disconnect in the signals, and hence it is a false signal. I need you to start thinking algorithmically if you want to create a profitable trading system. Because rules make it easier to trade and allow traders to make consistent results, again, not financial advice. I can scroll back so you can see how consistent this indicator is as compared to the Heikin Ashi indicator. Make sure you add other indicators and test them. Also demo trade them for some time before you start trading them live. If you enjoyed the video, go ahead and subscribe so you can get notified when I release a new video. You can click on any of these videos to learn more and start building your trading algorithm.